All right, it is Fear Friday, right? Fear Friday for the stock market. Things are selling off. Maybe stocks are up too much. Earnings are coming out. We don't have the big tech earnings till next week. We've had Tesla, we've had Netflix this week, but the real deciding factor for where this market goes is gonna come next week when we get actually the next 2 weeks, right? Microsoft, Meta, Amazon, right? The other Google, all the big mega cap tech companies report in the next couple of weeks. And so don't be so fearful. We're going to look at the charts right now. We're going to check out the charts. And I just think what we're seeing here is a sell off. I actually like this. I think this is a good setup because what we're seeing is a sell off before earnings. Okay. A sell off before earnings. So we're going to jump right into the S&P 500 SPX. Well, not SPX, but SPY, same thing. And we're going to look at what's going on here, right? So let me make this full screen for you guys to see. We'll look at the double screen later. S&P 500 has been up tremendously, right? And we ran up wave two FOMO before earnings really started to kick off. And now we're selling off, right? And I think this is a healthy sell off, right? This is a healthy sell off because you need to, burn a little bit of that excess capital that is just FOMOing in. We know this is FOMO, but for the most part, right, we're still in an uptrend. We're still in a gigantic, very strong uptrend. There's still a lot of cash on the sidelines. Oops, not that chart. We're gonna go to the 4 hour here. Still a lot of cash on the sidelines. You see, we're still in an upwards channel, right? We're still in a vertical channel. As a matter of fact, S&P 500 is off the trend. This is the original trend from the lows. We're in what I like to call a momentum trend. So we're still in that momentum trend with support at 450 right now. Support at 450. So despite all the fear, you see your stocks red. The market ran up a lot. But if we take a look here, we're really, how far are we off the highs? A couple percent, maybe 2%, not much, right? So S&P is still in a bull trend, okay, and we're waiting for those earnings to come out to see if earnings have troughed, if they bottomed, right, for the year. Have earnings bottomed for the year? That's what we're looking at. Now, all the macro indicators pretty much tell me that we're still this is still a really bullish environment. We're in a rolling recession. We're not looking at any deep drop in the economy. We're not looking at a complete collapse in growth. We're not seeing that. That's definitely not in development right now. What we are seeing is a rolling recession, right? Things are slowly starting to cool. We talked about that yesterday. We're seeing a slow cooling in the housing market, right? It's starting to bounce from the lows, but it is cooling still. And it is still cooling still. Industrial production went negative, but the big catalyst, inflation, is still cooling. If we look at trueflation is also coming down. So on a technical basis, S&P, we got support at 450, 451, whatever you want to call it. 450 is 451. We haven't even got there yet. So expect some more downside. I don't think we really start to bottom and find support until maybe Monday or Tuesday, right? Especially for Tesla. I know Tesla's selling off pretty hard. There are buyers down there. There are buyers that will step in maybe around 250 for Tesla, it looks like. And this is the S&P, though. We're still grinding up. We're still in an uptrend. We have support here. We got support at 448 also. I'd say more so maybe, 450 to 448, somewhere around there. And then you have a major support at 444. So we still have a lot of room. We have a lot of supports before, we really flip over. If anything, this is the market just showing that we need a relief. We need a sell-off to relieve some of this excess capital that's coming in. A lot of people FOMOing in, a lot of retail investors. But for the most part, it looks like we're still in this bullish trend, right? The macro hasn't really changed. It feels like things are very bad because you're in the market, right? If you're in the market, if you're not in the market, you're excited. If you missed out on the rally, you're hoping for this big pullback back into the previous support. And once you start seeing things start to support, people are going to get FOMO again because they're going to say, "Dang, okay, the buyers are strong," and you're going to get that feedback loop, that positive feedback loop. So that's S&P. Now, intraday, when we dive a little deeper into the intraday, we are supporting PDC, previous day close here on the S&P. So we have two supports at 452. Does it hold over the future? I don't know, but there is buyers stepping in. We're not seeing a very sharp sell-off, right? If anything, it's Friday. There's a lot of options that expire today. I believe so. I read that earlier. Uh, Something $1 trillion of options. Who knows if that story was actually, accurate or not? But it is possible we have a lot of options expiring today. Now, also keep in mind that yes, S&P is selling off, but if we go to the Dow, right, the Dow has been very strong, right, and the Dow is actually breaking out. The Dow's been breaking out, so we do have market breadth, right? You might have weakness in the spies, you might see weakness in the S&P 500, but it's really just a rotation, right? In my view, we're seeing a rotation. We're seeing a rotation in the value. Why? Because the S&P has been up a lot, right? The Qs, the technology stocks have been up tremendously. So you're going to get that rotation into that, you're going to get that rotation somewhere. Is it in small caps? A little bit, but we're definitely seeing it in Dow, right? We're seeing the rotation into Dow. IWN has also benefited from that rotation, although it is stalling at the moment. Well, duh, markets don't just go straight up. You need consolidation. You need some period of consolidation, and we are starting to see that, right? QQQ has been up the most by far, and it's really just pulling back into support, right? So if we dive a little deeper into QQQ, we have a gap to fill down here at 372, 373, call it 373, somewhere in this area of support before, we find out, can it hold? Of course it's going to sell off because it's up too much, right? It's up too much. I think a lot of the price action is front running earnings. So I want to see a sell off. I actually enjoy this, seeing the sell off into earnings before we see, Apple, Microsoft, Amazon, before we see the rest of the mega caps actually report. I want to see a sell off because it's a relief. Okay, let's see what the earnings actually are. If we were going higher from here, I'd be a little more worried that it's a blow off top. But we already got that blow off top. Now we're starting to relieve. You're starting to see that relief happen, and there's buyers waiting at the bottom. Buyers want to, especially if we come in with better than expected earnings, a buyer step in, and then we start to support that level, right? So that's what we're looking at there in the intraday. Let's go a little closer for the Qs. The Qs are beneath previous day close. They are testing yesterday's support, right? So that could break lower. It is Fear Friday, right? It is Friday. There are buyers stepping in with FOMO, but for the most, if we look clearly, we know that there's still more room to the downside. Okay, that's not a negative thing. That's a positive thing. Obviously, if you got it, we're talking about the overall macro trend. The overall macro trend is still higher. Okay? It is still higher. So expect to sell off and buyers to step in. Now, the number one thing that you want to look at here for S&P, and I'm always using S&P because it is the overall equity market index. SPY is the ETF. We just want to see support, right? We want to see buyers start to step in. I don't know where it's going to be at, right? It could be here. That'd be very strong if we get buyers at 450 coming, because I think we still have more room to the downside. Or we could come all the way back down to fill this gap at 446 or back to 444, right? Either way, you're looking for the buyers to step in. We might not see that. The first wave of buyers come in till maybe next week, Tuesday, maybe Monday or Tuesday, right? We have more economic data. We have the Fed meeting. So there's a lot of stuff that we have to kind of get through before we see a relief rally, right? We need to get through earnings. The next 2 weeks are going to be vital, though. You have earnings from the mega caps, and then you also have the Fed talking. You got a decision. I think the rate decision is next week, I believe so. And you have some more economic data, right? So we're going to keep track of that. We're going to keep our eyes on that. Now, pushing over let's get over to the actual macro. Let's get over to the macro charts to see what are the price actions what is the market price action actually telling us here? All right, what is the market? Let me see, make sure I'm on the right one. What is the market price action telling us? Um, Okay, yeah, this is the chart we're looking at. So first, we always start with the U.S. dollar. Now, the U.S. dollar retraced a lot. Okay, we got a big upside move back into support, right? Back into support, and this is a crucial area. Are we going to get rejected here? Because if we do get rejected, that's going to be very bullish. This will restart the rally. So this rejection should coincide, right? Should coincide with the market starting to bottom and rally out. Now, if we get back above this level and we start holding, there's a lot of resistance, but if we get back above this level, then we should be consolidating, or in the S&P and crypto, whatever it is, we should be consolidating a little longer, or even trending lower, right? We want to see dollar weakness. This is the key. We want to see the dollar weakness. And if we throw on those moving averages, keep in mind there's still a lot of weakness. Okay, there's still a lot of weakness. This is the weekly chart, so we are taking a look at the weekly chart. It's a little bigger chart, but so far, what are you going to get? Risk on, more risk on, or risk off? So far, the dollar's trending lower. The trend is lower for a lot of reasons. Right now, turning to the cost of capital of the 10-year yields, this has been very questionable. What's going on here? This is basically the cost of capital. Okay, I say it all the time. This is the bond market. You might hear about the bond market a lot, but you're not confused on what it is. These are the real interest rates to the market, right? This is what really, um, this is the 10-year benchmark yield, but what it is it's really the benchmark rate for the cost to borrow money, right? Equities look at this. We go to the 2-year. This is how much it costs to borrow money in 2 years, basically. So, and then economies do better. When you hear about the yield curve is inverting, or the negativity, the recession indicator. What that means is that money is more expensive to borrow short term than long term, right? And you want that flipped. You want this to be cheaper on the short term so that you can fund growth, right? You don't want long term cheaper. You want short term cheaper. So we're still waiting for this indicator to flip. Maybe it peaked out. Maybe it topped out. We don't know yet, right? We're going to keep our eyes on that. And the very opposite of that, right? The inverse relationship is bonds. Who's going to come in and buy these bonds, right? This is a risk to the market, but I don't think it's really going to happen. We're going to see who comes in to buy these U.S. Treasuries. Somebody's going to have to buy them, whether it's the Fed, whether it's the U.S. Treasury, Janet Yellen, who knows? But somebody's going to have to come buy these bonds, and I'm just using TLT as a proxy so that we can get the yield or the cost of capital cheaper, right? This is also not just the cost to borrow; it is the interest payments for the government, right? As a proxy, this is how much the government has to pay, or this is their interest that they have to pay on their debts, right? That interest is at a record high. We have a couple charts. They will be in the macro report this weekend, coming out on Saturday, where you can see the actual interest that the government has to pay. And this is why my whole thing is, hey, at some point, because this cost of capital is so high, we're going to get QE. We're going to get more monetary stimulus at some point, because economies cannot rebound until we get more. They can't rebound until rates come lower. This is going to crush rates, right? This is going to, I'm sorry, rates are going to crush growth for all the reasons you guys know. Interest rates are too high. They take a big chunk out of GDP, and you need somehow to monetize that. So I expect that to happen. Now, the other risk is actually starting to play out a little bit. This is oil. Now let's dive in a little deeper. This is the cost of energy, right? The cost of energy, we need that lower. It's looking bullish. It looks like it is wedging right here. Okay, and this is a big risk to the market. This is one of my risk off. If this goes higher, this is risk off for the market. We should see some more. I guess on the backside of the year, we should see inflation stay stickier, because oil prices are going to go up, and that's the biggest input to inflation. So I definitely don't want to see this. If it comes down, and I'm trying to simplify things here, if it does come down, if we do finally get rejected and trickle lower, I'm a lot more confident about the second half of the year, because we know inflation's already coming down. We know that the economy is sticking around, and we know the Fed is near pausing, right? They have paused. They might hike one more time, but the market isn't worried about that. It's worried, can growth hang on? Is inflation going to come in return? So this is the big input to that. Shelter is coming down though, so shelter costs will basically factor into CPI and pull that lower. We need oil, energy also. Those are the two big factors: shelter and oil, right? Shelter and energy. Those are the big ones. Food is coming down for the most part. Now, here's why I'm not so worried about this market sell-off. Are we seeing the VIX really spike? No, we're seeing the VIX barely move. So if anything, there's people, investors, fund managers, they're waiting in cash to buy the dip. They're waiting to buy the dip. Maybe I'm wrong, but that's what I see here. I see that the VIX is not moving, and the VIX is buying insurance against the S&P 500. Those are people hedging against the S&P, hedging against equities. We're not seeing hedging happening. Why? Because they're not hedging against it. They're waiting to buy the dip. That's what I see, right? We go to Nasdaq volatility, same thing, right? Volatility is basically frozen. It's going nowhere. Bond volatility, bond volatility has been pretty elevated for the year. So we're going to keep our eye on this. This is important too, but it's not making new highs. Hey, maybe it breaks out, but we're going to keep our eye on that. That's also a risk. Triple B spreads, right? Credit risk is non-existent. We're not seeing credit risk. And I think a lot of that, the reason we're not seeing that is because KRE is moving higher. We're actually starting to break out in KRE, which are the regional bank ETFs, because the Fed stepped in back in March to support the regional banks with bank term funding program, or the emergency lending facility. came in, supported these banks. Everybody expected a second half rollover. I did too. I was like, hey, maybe we roll over. It's not happening. You got stability. The market is confident. Hey, the regional banks are not rolling over. One more rate hike could cause some damage, but you think the Fed's not already looking at that? They are, right? The Fed's balance sheet is making new lows, but right now we have stability in the banking sector. We have stability. It is there. And we see that proxy through KRE, right? The regional bank ETF. So that's what we're looking at there. Like I said, S&P is well now for when we look at market breadth, and I know market breadth is how much you hear there's the what is it the magnificent seven: Apple, Amazon, Facebook, Google, Meta, Tesla, Nvidia. Those are the only stocks moving the market to the upside. That's not actually true. Yes, are they pulling the market higher? Yes, but there's a lot of ways to measure market breadth. We see I'm looking at is, are we making progress on a rate of on a are we making progress in other indexes? And this is equal weight. I'm sorry, this is the S&P equal weight. It is making progress. It's slowly trending higher. Okay, you can't deny the trend that equal weight is moving higher. So we are getting market breadth. We saw the Dow moving up, and that tells us that there's a rotation happening. There's a rotation into these smaller caps. There's a rotation into the value stocks. There's a rotation out of tech. And eventually that rotation will come back in a tech. It's a healthy rotation, right? Nothing too negative here. All right. So yeah, that's what we're seeing now. Crypto is still on pause, right? Crypto is still on pause. We're still waiting to see what is crypto going to do. How's the regulation? When is that ETF going to come out? Do we have more news? We don't know. But this consolidation, the longer we consolidate in Bitcoin, the bigger the breakout will come. And we like to talk about Chainlink. Chainlink is starting to break the trend here. Now it's probably more likely to come back down, just given the fact that Bitcoin hasn't moved. But CCIP, big game changer, right? CBDCs, Fed now, all that is going to coincide with the tokenization of institutions in the financial trade banking sectors, right? And all the banking sectors for messaging and all that. And they need oracles. They need oracles for the blockchain. CCIP is just got released. We'll see how this plays out. I know that's a little more technical for some of you that are new, but we're gonna have some research on this pretty soon on CCIP, on Chainlink, and why we're so bullish. This is the most underrated crypto, we believe, the most underrated crypto project in the space, right? That you really don't know about. A lot of people just don't know about it. It's not a meme coin. It's actually doing some work. I'm sorry, it's actually a use case in real time that we are seeing. So check out Chainlink, CCIP, proof of reserves. The reason why I tweeted this yesterday, FTX. What do we see on FTX? Let me go to my Twitter really quick because this is part of what CCIP does, right? We got this. Oh yeah, Trueflation too, 2.1%. Inflation is falling, right? Inflation is falling. Now, are we free? Are we frozen here? Come on now. All right. Alameda executives saw 10 billion cash gap months before the collapse. So this is the FTX collapse. We saw 10 billion of cash and in the negatives basically before there was actually a crash. So what does that tell you? There's a misallocation or a lack of regulation in the space, right? In finances in general. So when it comes, let me just put this in context really quick, okay? You had Gary Gensler come in, you had the SEC come in, they all regulated, they all checked out Alameda, they looked at FTX, everything was fine, right? 3 months, 2 months, whatever it took. Why do that? Why? Because users are going to demand that we see proof of reserves or real time on chain, right? Proof that an institution, a financial institution, has the reserves that they say they have, right? They have the assets to cover the liabilities. We want to see that in real time. Chainlink brings that to you with proof of reserves. I think it's going to be a big project. Like I said, it's new, so people don't really know about it. But proof of reserves fixes this problem. It solves the problem of fraud beforehand, right? People are going to see in real time, day to day, do they have it? Yes or no? It's giving you a feedback loop. And that's part of the reason we're bullish, other than connecting the internet. All right. Now, getting back to it, Tesla stock pulling back hard, right? If you guys are not in Tesla, this is a big buying opportunity. We saw that bearish ascending triangle. It broke down. It broke down. It's coming back down, and it is supporting at 255 right now. Maybe we come back to 250. Maybe who knows? But we'll see the buyers step in eventually, right? We will see the buyers step in eventually at some point. Now let's flip it back to the intraday, the actual intraday price action, and take a look at what we're seeing here. We'll go over a couple stories also. Okay, so what are we seeing on the index? Are buyers coming in? SPY. We have some room to the downside. Okay, like I said, we do have some room to the downside. Um, we're not seeing a whole lot of support. I'm sorry, we are seeing some support here, but it's going to be a sideways market for now, right? Well, now, what is the news? What are we coming in? What are we seeing here? What are we actually seeing come into the market? Now, just so you guys know, or keep in mind, data is coming in slower than expected so far. We've seen data come in very slow. The economy is cooling. This week's narrative, really, for the macro is that the economy is cooling. Okay, the housing market is showing that it did rebound, but it's still cooling, right? It's not rebounding super fast. It's still cooling. What else did we get? We also had well, I have to look at my charts here, but we are seeing cooling. What is it? Oh yeah, manufacturing indexes are still negative. They're still in recession territory, so stuff is still cooling. The home builder sentiment is climbing still. So there is some positive sentiment for home builders. I think we're really starting to turn in the macro, and it's really hard to see. It feels like, oh my gosh, we're rolling over, we're going back to the lows, but I just don't think that's the case. We're still seeing, a lot of macro supports, and there is headwinds, right? At the end of the month, we're going to see does the UPS strike disrupt supply chains, right? Does it disrupt the supply chains and cause more supply side inflation? Maybe so, maybe not. I really doubt that happens. I think there's a backup plan there, right? So we do have a couple risks coming into the market, but like I said, for the most part, I think it's more about earnings. I think earnings are going to be the biggest catalyst here, and we're seeing a revision up so far in earnings season. Okay, now who we got? Who do we have? J&J yesterday beat Johnson and Johnson, one of those big mega caps, right? I guess yeah, it's a mega cap. It's a big company. They beat earnings, so we're beating earnings so far, and we're going to get a report again. As the macro report will come out on Saturday. Check it out. Subscribe. Link in the bio. Link in the description if you want to get all this, if you can't keep up with what I'm saying, or if it's just too much information, right? I'm the same way. I might see somebody say a bunch of things. I want to read their actual report so I'm not here, so I can process the information. So go check out that newsletter. Link in the bio, link in the description. It's free, right? Go check it out. It'll come out on Saturday. So earnings, like I said, we got big earnings next week, and so far, that's pretty much what we're looking at. We're looking at, you know, are we going to beat guidance, EPS? Are we going to beat revenue? Maybe not revenue because, GDP is slowing, but we want to see that EPS. Are margins starting to bottom out in the overall market? Are we starting to see margins start to bottom out? That's going to be key, I think, going forward. All right. So right now, currently, advanced decline is positive. Okay, we're still positive in the advanced decline line. QQQs are at the bottom. Let's see, what else do we got here? All right, I'm gonna do some technical analysis really on Tesla. I know a lot of people are looking at Tesla still, and where is it gonna bottom at? Where are we actually gonna bottom for Tesla? Right, it's selling off very sharply. Right, this is a very sharp sell off. I think we're down like 13% already, 14, 15% in a couple days. Right, that was quick. So where do we bottom at? Where's the possibility of a bottom when it comes to Tesla? We just filled a couple gaps. We filled the 261.90 gap. We just filled, and we're sort of bouncing. Can it hold up? I don't know, 257.50 gap. So we filled a couple gaps. I think this is the uptrend that I have. Let me get rid of this downtrend. We've already broken that, but this is the uptrend that we've seen this far, right? From the initial gap up back in, was this May, June? We saw a gap up in June, big gap up for Tesla that kind of started off, that kicked off. Everybody thought the rally was over here. So I'm pulling from that gap. Our second point of support on this trend was right here, right? So if we draw that trend, it's very, I don't want to say it's very possible, but as long as we hold this trend, I think we're in a good space. If we roll over, then I'm going to be a little more worried about, okay, what's changing in the macro. Always keep your eye on the overall market though first. So maybe 250 at the lows. I think maybe 250s could be the bottom here for Tesla. If we continue to sell off, we'll see. I haven't really seen any buyers step in yet, right? We did beat revenue, we beat EPS, we beat on margins. Everything really beat. And you have a maybe it's Tesla or Ford. I'm sorry, maybe it's Ford or GM, who they're in talks with to license FSD, full self driving, which that would smash margin. That would create very good margins going forward. And if just the whisper of that being real is going to pump margins, so I'm looking out for that to see that actually passes, that actually comes into play. Right now, to coincide that story, okay, let me dive a little deeper. Let's keep this price action here. Right. In the short term, hey, Tesla's very bearish, right? We're under VWAP, we're selling off, we're going lower. But there was a new story that came out from a couple of days ago, how the Middle East is preparing for the post-oil EV era of transportation, right? And really, the overall theme here for Tesla is that regardless of the short-term price action, regardless of the bears or whatever it is, the world governments are shifting towards a renewable energy, uh, landscape. They need to produce more, and that whole growth is slowing thing is is really going to lead us to what? It's going to lead us to the growth slowing in the global economy is going to lead to more stimulus, whether it's fiscal stimulus. Let's not forget about that. That's still online, right? Government spending for infrastructure, for technology, whatever it is, social spending. They're going to keep spending. Number two, the debt payments are too high, so the Fed usually monetizes that debt on the balance sheet at some point, right? And we're getting to that point where debt payments are way too high, so they're going to start monetizing. And the only way, because governments have to keep spending, and they're doing it, they're spending it. This is why we see Saudi Arabia investing in electric vehicles. So, whose technology are they going to lease? Tesla's, right? If Tesla's at the top of the pack, they're going to lease Teslas. So the overall narrative is EVs are coming. This is it. We're actually seeing a transition out of gas vehicles, or let's say ICE vehicles, into electric vehicles. So who's going to lead that charge, right? Just like who led the mobile wave, it was Apple. Who leads the EV wave? It's going to be Tesla. And cars are much more of a bigger price point for people than iPhones. Okay, and there's going to be other stuff there, but for the most part, Tesla has a lot of long-term prospects here. So Saudi Arabia has been working on its own brand of EV vehicles, CER is what they call it, and plans to install 50,000. So even though they're an oil giant, they're already looking to transition, right? The U.S. and China are also bringing brands to the Middle East. I'm sorry, I didn't even finish that sentence. They plan to install 50,000 domestic EV charging stations by 2025. Who has the best charging station technology? Tesla, right? So at some point, yeah, can they put their own stuff in? Yes, but I can see the opportunity, right? And this is how you invest. You don't say, okay, I'm going to invest now. Once you have enough momentum, you're looking at, okay, where is this headed, and who's dominating? Who's gaining the most momentum? Who has the best technology? Who's going to have to lease out their technology, and that's going to be Tesla. Do they lease it to the Middle East? I don't know. I don't know. We'll see if that actually plays itself out. But they do have like, if the Middle East is going to do anything, they need the best technology for these things to work. It takes a lot of capital to invest in, and you want to make sure you have the best technology. So we could even see Tesla uh, licensing out their charging station technology to nations, right? Um, does that sound very optimistic and ambitious? Sure, but we'll see how that actually plays out. The U.S. and China are also bringing brands to the Middle East. GM is preparing to launch Cadillac something something. The Hummer EV, blah blah blah. These are all EV trucks that they're starting to come out with, and they're basically going to rival Cybertruck. Middle East this year, Ford intends to launch EVs in the region of 2024. So this is all in China. Okay, this is all going to happen in China and the U.S. Saudi Arabia's Minister of Investment just signed a $5.6 billion deal with Human Horizons, a Chinese electric vehicle manufacturer, while the UAE has a 7% stake in NIO, and an electric car company based in Shanghai. So we're seeing global governments spend, right? They're spending billions on the EV revolution. Tesla is leading that revolution. So I can, in the macro outlook, expect that this money, this stimulus, basically flows into whoever wins, right? Or the top three winners, right? A lot of people can win, but the money's going to flow to the winners. So this pullback for Tesla, and I'm not the only one who thinks this, right? A lot of people are believing this. A lot of hedge funds, they want to see the bottom of EPS. They want to see the bottom of earnings. They want to see, can full self-driving actually work? They want to see how are they going to monetize the supercharger network? They want to see if Optimus bots can actually bring productivity to the factory. So as we make progress, as we see, right, more progress being made on that front, man, that's going to be some serious catch-up trade for Tesla. It's going to be a serious catch-up trade back to all-time highs. That's what I'm saying. I think S&P gets back to all-time highs. I think Qs get back to all-time highs this season, like it's a football game. It is a competitive game. So, at the second half of the year. Now, inflation has to keep abating. We have to keep seeing inflation abate, which is why I'm keeping my eye on oil. We keep our eye on the shelter inflation. CPI is already at 3%. Now, I know people say, "Oh, it's going to bounce." I've seen a couple dudes say that inflation is going to bounce. It's going to go higher. But dude, inflation is the rate of change of prices. It is not the absolute price. It is the rate of change. So even if inflation stayed the same, even if oil stayed at 75 for over month, the rate of change of the inflated percentage is lower because it didn't go up. So if month over month the price didn't change, that's a zero rate of inflation. Inflation has to go up. It's the rate of change of something going higher. I think we see negative inflation by the end of this year. I think we're going to see inflation very low by the end of this year. And the more I look at the numbers, the more it convinces me people are way off sides. Okay, and that's going to be the biggest catalyst I think going forward is because the economy is still slowing. We're seeing more weakness come in at month to month. I'm gauging, hey, is this real? Are we more inflationary? Are we more at risk of growth collapsing, or are we more at risk of inflation coming back? And I do change my view on that on the base frame because I'm like, okay, what's it looking like? Well, the labor economy is still there, but manufacturing is still negative. It hasn't bounced yet, and that's going to be a big input to oil prices. And if manufacturing remains negative, then oil prices should continue to fall. So unless OPEC keeps cutting production, but they can't do it forever, right? They can't do it for forever, and so that's what I'm looking at. They can keep trying to do it, and maybe the prices do go higher. Maybe I'm completely wrong, right? But those shelter prices will eventually come in also. So point here is the macro backdrop is setting up. We're starting to see the macro really start to set up. So BlackRock, the world's largest asset manager, announced this week that the head of the world, let me see, this week it was adding the head of the world's largest oil company, Saudi Aramco. Oh, okay. So they're adding Saudi Aramco CEO to the board of directors for BlackRock. Some investors might have been caught off guard given BlackRock's leading role in the market when it comes to investing in low carbon futures. But CEO Larry Fink, BlackRock CEO, who's been under intense pressure for his embrace of the ESG, specifically cited Saudi Aramco CEO Ahmad Nasir, whatever, understanding of the global energy industry and the drivers to shift towards a low carbon economy. The shift towards a low carbon economy is literally the catalyst for EVs. It is the catalyst for electric vehicles. It is the catalyst for a new world away from oil. You're seeing the biggest oil producers shift away from oil. So they're going to have to cut production to keep their prices higher, but they're investing in this. This is a global secular trend that will continue. Who's going to benefit the most from it? There's going to be a lot of companies that go up a lot, right? But who's gonna really monopolize this space with EVs? It's going to be Tesla, right? And we're still seeing that roll out. So I just want to keep that in your purview. And there's other companies who are going to go higher. Don't get me wrong, but the narrative for Tesla is only getting better as time comes, as time continues to roll out. Anyways, yeah, this is just the whole. What I'm looking at here is just how the Middle East is basically positioning their government spending for the transition into EV transportation. So as an overall narrative, that to me signals, well, Tesla has a lot more room to grow as this stuff continues to roll out. All right. Now we're getting a small recovery on the Tesla price action, but I do expect a probable rejection here at VWAP. This is usually where you get rejections at VWAP. We'll see, and this is key because we're seeing, hey, are institutions buying yet, or are they still selling? So we'll see if Tesla can get above this level. If it does sell off, we know institutions are not ready to start buying yet. Do we know that the probability is in our favor, or the probability is more likely that institutions are not buying this dip yet? Once we get above VWAP and hold, then we'll see more rotation into a Tesla. We'll see where the buyers are at. I think there's a lot of buyers waiting. This thing ran up so fast, people missed out. We've seen a lot of upgrades, right? They beat top line, they beat bottom line revenue, they beat margin revenue. Um, and There's a lot of good things in sight. The downside is production may slow, only because they're investing in the production of they're investing in the infrastructure for more Cybertrucks. So that's not a negative, right? Cybertruck comes online, that's going to be big news. All right, S&P is now above VWAP. It is trending a little higher. So we got Tesla here at VWAP. I don't know if it's going to last. We'll see. But if we do get the overall market, if we do get the S&P getting above that level, as it is right now, look, we're getting a nice little push here. It's usually Fear Fridays, but hey, if we break out and move higher, this will be good, right? Anything down the pipeline that we're seeing that we're missing here. What's up, William? Um, Yassine, what up? What up, Ace? Everybody's fearful right now. They're worried about this pullback, but I'm telling you, the macro, I'm not telling anybody to make any investment decisions or trading decisions. That's up to you. But I am saying the macro is still in place here, right? This was a big blow off top. The macro is still in place. We're seeing a lot of good things here. Check out the macro report coming out tomorrow. Go sign up for free. And that is gonna that maybe will help help you get a better gauge on what's actually happening here. Now back to Tesla. Gary Black says, right, this is okay, we're not looking at Tesla, this is S&P. I'm gonna go to Tesla. I know everybody's eyes are on Tesla. We got the S&P moving higher. Can we get above VWAP for Tesla? I'm not sure. I'm not sure it's gonna happen today. Maybe Monday, Tuesday. So Gary Black is a big investor in Tesla, and he's talking about the catalyst going into the second half of the year. So here's the catalyst for Tesla: falling EV commodity costs. So and this is very bullish. This is why I'm still like long Tesla, right? Commodities. So in order to build their product, they have to buy commodities, right? They have to purchase commodities. So the cost of capital is depends on the cost, not the cost of capital. I'm sorry, not to borrow. The cost for their product is going to depend on how much commodities are. Well, commodity prices are falling. So that's going to help their margins. And I'm guessing the margins have bottomed and they improve and surprise people to the upside as they have this quarter. So commodity prices are definitely falling. Okay. Cybertruck starts to deliver. Also, not only are commodity prices falling, what was the other? Oh, producer prices in general for the overall market are falling too. We're at almost negative. Producer prices are going to be negative in the back half of the year, right? Producer price inflation leads CPI, leads consumer price inflation, and it's going to be negative pretty soon. So that means producers overall S&P. I'm looking at the macro. You can probably find an exception in any company, right? Any single company, but I'm looking at the overall macro. And if producer prices are negative, that means they can they can retain more earnings and push those costs onto the consumers, and consumers are still going to spend, right? Anyway, Cybertruck delivers launch in Q4. So the build up to that, we never Tesla always the price always goes higher into the news. More likely than often, the way Tesla moves is price goes up, price goes up, price goes up. And then when they actually release the news, it sells off, right? And then it goes to find support. That happens all the time. Not always the case, but that's usually the case. So I expect price to go up before the Cybertruck actually launches, and then maybe a sell-off, right? Fed pivots on interest rates. I think they do pivot, right? The pivot is the pause. They've already paused, so they've already slightly pivoted. Now they say they're going to hike 2 more times, and I think they're really trying to manage expectations here. They're really trying to manage expectations to keep their credibility, but they know inflation's coming down faster than expected. They know CPI is coming down. They know shelter prices are lagging, and they're like 40% of 40% of CPI, so they're lagging. And when they do factor in, we're going to see prices fall pretty quickly, I think, in CPI, and that's going to be another leg. That's going to feed into the wave two FOMO. Twitter positive cash flow Q4. I don't know how that goes ties in with Tesla. Maybe it does, but I'm not educated on that. 7,500 EV instant rebate for 2024. That's going to be huge. $10 billion share buyback. Oh, wow. I want to see that. Tesla buyback shares. That's going to squeeze the stock. You remove supply, and with the demand coming in, that's going to be big. FSD level 4 autonomy. Well, we'll see if that comes in. Can't bet on that. 25 to 30K compact Uh, oh, so they're coming out with the car that's gonna be somewhere between 25 and 30K, right, into 2025, and it's gonna be a compact car, so that's gonna be huge. He has a $320 dollar price target, 6 to 12 in the next 6 to 12 months. Makes sense, and I think he's being a little conservative there because we know if all this news actually does factor in, then we're gonna get a squeeze. We should be squeezing actually higher, and what the biggest risks really, are gonna be for Tesla are gonna be if interest rates keep climbing and they have to cut margins and, they have to cut margins and the overall market starts to roll over, and we get some type of geopolitical or we get some type of turbulence in other countries as they build their factories in Europe, as they build the factories in China. Well, China's stimulating right now, so I expect Chinese demand forward looking to increase too. And China's the biggest market for EVs, so they should. They're not dominating the Chinese market, but I think they will, especially if full self driving comes online. Those other OEMs, when he said other OEMs are going to license out FSD, I think it's going to be in China, not in the US. The US is very, very behind when it comes to being progressive on technology. We might be progressive in our social politics, but we're not progressive enough in technology, right? So I think it's going to be China, and China is the biggest producer of EVs in that space. So there we are. We're getting rejected on at VWAP currently so far. Um, throw in your questions if you have any questions about the overall environment. If you want me to answer any hard questions, let me know. I know there's a lot of confusing stuff out there. I don't know everything, but I'll tell you what I think and give you a little more context to that. Less than 5% of the housing supply is accessible in older disabled Americans. EV battery plants emerge as wildcard issue for UAE contract talks. Okay. You just scrape through some of this news really quick. Oh, the Fed Now news. That's some big news. The Fed Now. I wonder how that's going to impact, Visa and all these other companies with Fed Now because Fed Now is yeah, you're going to be surveilled, but it's going to be quicker, faster, cheaper for taxes and everything else. So instant payment service Thursday following the several years of developing a system officially say will now faster allow cash. Okay, this is gonna be good for businesses. The Fed now it'll help for businesses to settle payments instantly. So the federal, I know it seems negative, like oh my God, Fed now is so bad. They're taking over the system. I think it's overblown. They've been taken over, right? They can surveil anything you do anyway if they care enough. The Federal Reserve built the Fed Now service to help make everyday payments over the coming years faster and more convenient. Fed Chair Powell said, over time, as more banks choose to use this new tool, the benefits to individuals and businesses will include enabling a person to immediately receive a paycheck or a company to instantly access funds when an invoice is actually paid. Okay. So far, 35 early adopters, including JP Morgan and Wells Fargo, have signed up. Two of the four largest banks in the U.S. have signed up. There are an additional 16 institutions providing services for banks and credit unions. The American Bankers Association said it welcomes the FedNow development, noting that the central bank joins the clearinghouse, which could put payments and service online for what? Oh, okay. Oh, blah blah blah. The rest of it is blah blah. Right. So this is interesting. This FedNow development, it's going to create more productivity, more efficiency in the banking sector, which could cause some turbulence for some of those DeFi. Well, I think it really brings up what is DeFi for? Why? What if DeFi is just as fast or faster than Fed now without the surveillance, right? So I don't know. I mean, I'm not going to dive deep into that, but that is something that people are very confused about. What Fed now is it evil? What is it? It's going to be faster payment rails. If you want to get paid faster and, with lower fees, then, what they do is what they do. I mean, what people choose is going to be what people choose. And I think people are going to choose that, especially businesses, because it helps. We have a debt problem, and the only way to get rid of the debt is to produce more at a cheaper price. So that's going to be one technology that, and the funny thing is, I think they are going to be using oracles. They talked about it in their white paper that they should be looking to use oracles. And, do they have to be decentralized oracles? Probably not. Good morning. Yeah, let's go. Good morning. Good morning. How's everybody doing today? All right, I'm gonna look at the crypto front. Let's see if there's anything new on the crypto front. Anything we're missing here? Um, just the SBF stuff that's coming into play. Again, Chainlink should prevent stuff like that. Proof of reserves with their proof of reserve system. CoinDesk is all over the place. DeFi protocol, Connect Finance hacked for 17,000 Ether. McDonald's opens McNuggets land in the metaverse. Okay, I wonder if they did that in Decentraland or the Sandbox. Solana, XRP lead slide in crypto majors. You see, if you guys look at the price action too, Chainlink is like one of the only coins that's actually moving, in this market right now. That could change. I know it's a little short term, but that's because people are starting to realize what it is. You'll probably start seeing a lot of CCIP, CCIP on the headlines. What is CCIP? What does it do? How this crypto can change the DeFi game? Blah blah blah. Right. We're also going to look at how bear markets bottom, right, over the past, because people think that we need this hard recession for things to bounce. I don't think so. House Republican introduces bill that aims to bring regulatory clarity to the crypto space. Once this regulation clears up, it might take some time, but once it clears up, we're headed out of the winter, right? We're out of the crypto bear market. We're going to be heading into the crypto bull market. We're going to be heading into crypto summer, right? Winter, well, spring. I guess we're in crypto spring first, and then crypto summer when the Fed actually reverses course, and we realize we're not headed into a deep recession, that the economy is not falling apart. And like I say all the time, if you want to know why do I think the economy is not falling apart? Why we don't really see a recession? Check out the newsletter tomorrow. Go subscribe to it. It's free, and you'll see all the indications of why this probably is very unlikely to happen. Um, Trueflation is up. Historical currency policy projections for debt held. Let's see what are oh UK inflation is government. That's weird. The UK for the US, we're at 3% inflation, but Trueflation, which takes 10 million data points, has us at 2.13. But for the UK, it's the actual opposite. The government has inflation at 7.9, but Trueflation has it at 11.3. So that tells you it's not biased towards lower inflation. It's just taking more data points into account. And I know people say, "Hey, how do you trust in government?" You really can't. You really can't. But it is the rate of change, right? It's either going up or it's going down. It's not like they're going to lie and say the rate of change is down or up. It's just the numbers, the absolute numbers might be off for sure. I appreciate you guys too for showing up. Go check out the YouTube channel or Bluetooth channel to show me a little more support. Subscribe and check out my content on YouTube. It'll help me out. Help me out with the algorithm. Don't forget to you guys subscribe the video or the live stream if you want to support me a little bit to get more of this out there. Okay, so Tesla's now starting to push above VWAP. I don't know if it lasts. Maybe this is the bottom. Maybe, maybe not. We'll see. We'll see. FOMC. So looking at next week, what are the big catalysts in the economy for next week? And like I said, this week's catalysts, or I'm sorry, this week's the macroeconomic activity. It'll be in the newsletter. I'll even go over it on Saturday. I always do every Saturday. I'll go over it in depth and kind of roll through the narrative, right? So you guys can feel the narrative because you hear all this crazy news back and forth, right? What are the headlines right now in markets? The headlines in markets right now are the headlines in the market have been. Let's see, what are the headlines? What are we seeing? As a matter of fact, where's pro news? This year's big rally has come only on a few days, again challenging the market timers. The weakening dollar could mean good news for emerging markets. Hey, that's actually true. the dollar is starting to weaken. Hopefully, we get that rejection on the dollar for you longs, right? If you're short, you want the dollar to keep going up, but hopefully it gets rejected and we keep moving higher. Traders are wondering if now is the time for a summer correction. Actually, this is actually a really good article right here because everybody is looking for I think we are in a correction. Don't get me wrong, but like I say, there's a lot of cash on the sidelines. Just to update you, if you are new to the stream, there is $5.5 trillion of cash on the sidelines. Okay, and once things clear out, what was it? What was the thing that people are worried about? Stickier inflation. As the stickier inflation narrative dissipates, and I expect it to with shelter coming down, and hopefully oil prices also roll over, right? As that dissipates, expect more cash to come flowing into the market. That's what people are concerned with. They keep changing their concerns though. But first, it was the Fed pauses. We got the Fed pause. Market explodes. Inflation coming lower than expected. Market explodes. Now it's stickier inflation. Market should explode following that. So, anyways, um, do we get a correction? Yes, we do. But there's $5.5 trillion of cash on the sideline. People are off sides. They're not positioned to go bullish. We are getting more bullish sentiment for the first time in a while, which always calls for a correction, which we are seeing currently. There's a lot of bullish sentiment. But with this correction now, people get more bearish, and then we chug back along to the upside. The other part is year over year margin debt, which is leverage, is still negative. So we haven't seen people really lever up in this market yet. So I think once we get core down, we're going to see leverage start to come in, and we get wave two FOMO. I think we're in the wave two FOMO as right now. It's going to be up to earnings whether that wave two FOMO continues or whether we actually sell off. But okay, and then the third part is, what is the third part? I have it. I wish I could memorize all this stuff. I do sometimes. The third part is we got the margin debt. Other than just the fiscal liquidity that has been coming into the market, margin debt. Oh, equity flows. Yeah, equity flows on a year-over-year basis are still negative, even though price is up, even though the S&P is up a lot. Equity flows are still negative on a year-over-year basis, and that just signals that the real money hasn't really came in yet, right? It just hasn't came in yet. So I'm going to read this. Traders are wondering if now is a time for a summer market correction. That's what traders are wondering. And we're watching Tesla climb the ladder here. Can it get back to PDC? That next resistance level for Tesla is going to be PDC, right? This is where we got rejected earlier in the price action. So let me see. This is going to be if we get above this, that's going to be very strong. That's going to be our first sign of a bottoming for Tesla, right? So if we get above here, we're going to show a sign. It's not going to go straight to the highs, but it just means we're putting in one zone. We're putting in one area where there's buyers, where we know there's buyers. So over the next couple of days, we're going to track whether those buyers step in again or whether new buyers step in expecting that to be support. So we're just looking at support we're looking at support being formed here for Tesla because it has a lot of upside going forward. All right, so back to that article. Get a drink of water here. So Bob Pisani, seasonality, it's a tough time for the year. So what is this? A bear report, valuations, blah, blah, blah. All right. After a string of up days, the old market leadership of technology and consumer discretionary is looking tired, and that's probably a good thing. Yes, that is true. Tech is selling off. Consumer discretionary, Apple, Amazon, Tesla selling off. I mean, there's more to it than Amazon and Apple, but consumer discretionary selling off. Those are cyclicals usually. There are two problems: seasonality and valuation. So this is kind of a bear piece or a muddling piece here. Seasonality, changes of seasons, and valuations maybe being a little too pumped. Okay, it's a tough seasonal period for stocks. The broad market tends to drift lower from mid-July through August. Okay, so that's a tendency. Most people think that all of seasonality can be wrapped up in the old saying, "Sell in May and go away." I don't know who wrote that, some dude. But there is a second seasonal peak in mid-July, which marks the transition to the seasonality week period from July to October. So that's usually a week period, July to October. I'd say maybe you're right on a correlation basis, But the difference is if inflation goes lower and the Fed is pausing, that's going to dissipate everything, right? So this is a buying opportunity, this dip. But we will get slowness. We are definitely slowing down. Thoughts on Goldman Sachs pullback? Goldman Sachs pullback. Here, let me throw it up on on YouTube. Hey, look, Tesla pushing up. I'm gonna just put the chart on there so I remember what this guy says about Goldman Sachs pulling back. If I lose some viewers on YouTube, I'm switching back to Tesla because Goldman Sachs. Who cares? I'm just playing. So, anyways, yeah, this guy's saying most people. So the season. So basically, these are the. This is the summer months, right? July through August through October are typically times that the market slows down. Can you link the article if you can? Um, this article right here. Let me see. Can I link this article? Oh shoot, I missed my comments on YouTube. Sorry, I didn't see anybody on there. Shorting. So many people got screwed heavily shorting. Oh, 8:20. Let me see how late I am. Oh, 6. How late am I on this? I heard that saying before. All right, so I'm gonna keep reading this. I'll link the article, and let's see, where can I link the article? I'll put it on YouTube. See if I can put this in YouTube really quick. I definitely can't put it in. There it is. I can't put it on TikTok because I'm not on TikTok. Like I literally can't do that. So jump over to the BlueTube if you want to. I linked it in the comments. The article right here. All right. Tough seasonality. Worst months for S&P 500. I don't even know if this article. Just so you know, I don't know if this article is actually, it's for unpaid, but we'll see. Just let me know if you guys if there's a paywall behind it. I don't know if it's free or not. Worst months S&P 500 since 1950. So the worst months for the S&P 500 since 1950 have been September, February, and then August. Okay, who cares? Valuations. This is probably the most important part. Valuations, earnings season, right? This is more important. Forget the correlations. The bulls have correlations. The bears have correlations. What actual earnings are going to be more important? Are we bottoming here? Market bulls have fretted for weeks that tech stocks have been overbought and are due for a pause. Okay, so they're waiting for that pullback. There's no question growth appears overbought on the surface, and valuations are certainly elevated. Says this girl, or says Nate Garasi from the ETF store told me nothing but most growth, blah, blah, blah. I don't care. Extremely overbought. So most growth ETFs are extremely overbought. How overbought? The Nasdaq 100 ETF is roughly 25% above its 200 moving average. And if you guys saw my videos on TikTok and YouTube, the compound, right? Josh Brown and friends, we're talking about, well, guess what? When the Nasdaq is above, was 20% above the 200 moving average on average, it's very strong. So that's momentum. That's not a bad thing. It just means wait for the pullback, get in. That is historically, and this is coming out of a bear market. That is historically extreme, says blah, blah, blah. Who cares? Though it is consistent with coming off major market lows. See, that's where we're coming off. We're coming off a major market low. We're not even at all time highs yet. I think we're headed there this year. So that's why things are different when it comes to the overbought. You guys remember during the pandemic when the market was oversold for like 3 months, it just kept going higher. Yeah, we were in QE. Yes, we were in QE, but we had no inflation. It was the opposite effect. Now inflation's coming down. People are offsides, extremely offsides. Those calling for a pause may be getting their wish. 2-month rally has lifted S&P Tech XLK by 16%, but tech has mostly been for sale over the last few days. Alphabet, AMD, Amazon, Salesforce, Meta are all down this week, though Microsoft and Apple are still up. And that's because the AI craze that people still don't and won't understand. That's why I expect the expectations for earnings, the guidance for Apple, the guidance for Microsoft, the guidance for these AI companies will continue to go up because they're cutting costs. They're eliminating their payrolls and they're increasing productivity. Did we just get a breaking news? Oh, okay. Some of the weakest this weekend may be due to the Nasdaq 100 special rebalance period. So we're getting that rebalancing, I think, this weekend, right? That'll probably finish off the downside, I think. People are afraid of that. It'll just finish off the downside move. We'll get the buyers come right back in. I don't think it's very significant. This will take place Friday at the close, become effective for the market on July 24th on the open. So this is where we get the rebalancing. Whatever, it's not going to be that serious. Yeah, we'll get a small sell-off possibly. Maybe the opposite happens. Who knows? These things really don't tell us what's going to happen. They just tell you that there is some type of uncertainty, and look forward to that. Goldman Sachs moving up. Um, probably gonna miss that guy's question. Jump over to the blue tube and ask me that question, bro. So I can see it on here. Okay, Tesla is getting rejected at PDC. We are seeing that rejection. Back to the article. Regardless of the rally suggests that hold on. Regardless, the rally suggests that XLK or technology sector is due for a period of consolidation or some profit taking, says John Murphy. Who cares? From stockcharts.com. If you want to check them out. While that does not necessarily mean that the rally has ended for the year, it may encourage investors to rotate some money into weaker parts of the market, which I think we're seeing. We're seeing the Dow go up, right? By the way, if you're watching the blue tube, you can see literally down here who is this? Dow at the bottom. Dow is above VWAP, right? Dow's made a big move yesterday, although the S&P sold off. So there's a rotation into the value stocks. Advanced decline here is on this screen, and we're above zero, meaning more stocks are advancing versus declining. S&P is kind of straddling, whatever. IWM is recovering, had a big upside move, and then the Qs are the weakest. So we are seeing that does make sense. We are seeing the rotation out of tech, out of consumer discretionary into healthcare. I think XLV is up today into the healthcare names. I'm still watching Teladoc on my Teladoc down here. Actually, let me pull up Teladoc um, TDOC because I think Teladoc has some big upside if it can get out of this range. Teladoc has some big upside. So we're seeing that rotation into value sectors. Today's strongest sectors are healthcare. This is today, by the way. On the verge of breaking through its April high, XLV. We'll check out XLV. Ed Yardeni agrees. Ed Yardeni has been calling this as a rolling recession. I love Ed Yardeni. He's a smart guy. He's been in the market for a while. And he says there's a lot of cash on the sideline from baby boomers who keep spending. This is why we won't go into recession because they have like $60 trillion of spending power as a whole. And they're going to keep spending as they retire. Healthcare has been an underperformer. And I think they're due for a run, he said, on air this week. Financials have been an underperformer also, and I think they're due for a run. So yeah, Goldman Sachs is due for a run possibly. We'll look at the technicals on that after this. Still for investors, the S&P 500 McClellan says no one should be surprised to see a summer correction in the next month or so. Okay, yeah, we're seeing that correction take place right now. Right now, the odds are not in favor of the bulls, so take some time. Maybe take some time off and enjoy your 5 1/4 T-bills. And that's really bullish. People that are collecting those T-bills right now, the people collecting the T-bills, 5 1/4, what do you think they're doing with that money? They're reinvesting it, or they're not going to keep saving cash, or if they do save cash, that's just more gunpowder for when they do see core inflation fall significantly, when all the geopolitical risks, come off the table, and when it's very clear that the bull market will continue. So I expect more of that. Now, the technicals, let's go look at Goldman Sachs. If any of you guys want me to do some technical analysis, I will. So I'm going to look at Goldman Sachs on the daily chart really quick. This is our daily chart. Okay, it's in an uptrend, right? It's starting to trend up. Let me change this to the macro. Just go ahead and throw in the comments if you guys want me to. What up, Tim Reed? What up, Hassan? This is what platform? This is TOS, Thinkorswim platform. It's free. All right, so I'm going to look at the quarterly averages first. And this is basically the last 1, 2, and 3 quarters of earnings for Goldman Sachs. The moving averages, how they're moving according to those, right? So blue is going to be your first quarter, yellow is your second quarter, or it's 2 quarters of earnings, and red is the last 3 quarters of earnings. This actually has a really bearish signal for the moving averages. You get the death cross, the short-term moving average cross above both moving. That's a death cross. Maybe we're recovering from that death cross, right? It's just a signal. It doesn't tell you we're going lower. For the most part, the pattern is a nice wedge here coming off the lows, right? From what was that last June? So Goldman Sachs is looking good. It looks like it's breaking out. It's above all those moving averages for sure. This is on the weekly chart, and I believe this is the 12, the 26, and the 42 moving averages, which is the last 1, 2, and 3 quarters of earnings. So Goldman Sachs could be breaking out here, but the real area you want to watch is, can it hold above, let's call it 345. Can it hold above 345? Not to the penny, but can it hold above 345? I'd say it needs to hold above 345. We've had some capitulations above 345. Never got to hold. It is a whole number. Next 350. But yeah, 345. We can hold between 347 and 345. For Goldman Sachs, which I'm not bullish on, it looks like this wedge can break out higher, especially with the banks moving higher. Now let's look at the index. XLF is going to be your index for banks. Is it moving up? Because this is going to give you momentum to the upside. It is. It's in a momentum trend. You see it's moving above those moving averages. So banks could be recovering here. And we did see very good bank earnings so far. Maybe the regional suck because the whole banking crisis happened in March, and that's going to actually factor in to this month's of earnings. But for the most part, the big banks, the too big to fail banks, are going to be just fine, right? So it looks like we are breaking out on the XLF ETF, and that means Goldman Sachs could find a run here. Um, so yeah, Sachs looks straight. Let me throw this onto the macro technicals. If we go to the macro technicals here, which is the 50-day, the 200, 50-day is going to be in your green. The 100-day moving average is going to be, yeah, we're on the daily in blue, and then the red's your 200 daily moving average. We're above all those. So Goldman Sachs looks strong, bro. It looks pretty strong. This is a little more bullish here. If I look at this, yes, we're a little overbought on the RSI, but that's fine. That's fine. It can chug along. It just needs to relieve itself. We are in the upside momentum right now, so you're going to see things overbought more than likely because the momentum is picking up out of a bear market. Once we get to all-time highs, that's when you got to be cautious of overbought signals because there's a lot of resistance at all-time highs. And I'm talking about the overall market, not these things. So Goldman Sachs is looking very solid in my view. Hey, once we clear the next resistance after we hold 350 is going to be 357. Okay, 357. So Goldman Sachs looks great. Do you think the dollar will go higher next week? I really don't know. I don't want to say I know. I'll throw the dollar up here. This is a very important signal to me. This is the most important signal, really, that just, when you take into account everything going on, the dollar kind of gives you that flat reading on what's going to happen next. And so we saw the dollar break down, and mostly, what's funny? The dollar broke down as soon as Janet Yellen went over to China. She went to go visit China, and the next thing you know, the dollar's breaking down. So, and really, what's going on here? I think, because I don't know, but what I think is going on here is as the dollar strengthens, it really hurts global trade. It hurts liquidity, and that's why the dollar always coincides with the bear market. But when the dollar breaks down, right, the US dollar breaks down, it's a signal of risk on because global trade liquidity is starting to pick up. If you're in another currency, whether it's China, Japan, Brazil, India, against the dollar, your currency strengthens, you have more buying power. You have more buying power. That translates to more demand, which translates to more liquidity in the economy, which translates to more capital market liquidity. Therefore, a weaker dollar is a bullish signal. So right now we're pulling in back to that trend that broke at 101. Okay, I don't want to see this, but it's okay. We're pulling in the moving averages on the daily chart are at least showing us that the dollar is still weakening, right? So maybe we pull back into this support. I don't know. We have a zone here that the dollar can pull into. And I'm gonna be and there's another signal too that tells me this is going lower, which is the volatility of the equity market is still suppressed, right? No volatility is really starting to pick up here. So we're seeing weakness in the dollar. This is the break and retest. It broke down. It's retesting that previous breakdown level, and maybe it rolls over. If it rolls over, great, right? The moving averages are converging lower. This is what we want to see to get that risk on environment, okay? This is exactly what we want to see. Now, if you're on TOS, TNX is going to be your 10-year yields, right? 10-year yields is going to be TNX. Let me erase some of this. Let me clear this draw set here. And TNX is just the ticker symbol if you're on TOS, or else it's 10-year yields on US 10-year over on TradingView. But yeah, we need these yields. There's still support. This is not great news, right? This is not great news. If we're going to see riskier assets, we're going to see Tesla do better. We're going to see Bitcoin, crypto. If you're going to see, Palantir. Well, Palantir has a strong narrative right now, but if you're going to see those riskier type of assets that move more than the overall market, which are called beta, high beta moves, we need these yields to fall. So far, I've been wrong. I thought yields were going to collapse, right? I've been wrong about that. I thought yields are going to come down. They're going to fall. Risk assets catch a bid, right? But I also thought the economy was going to fall. So really, this is a nice recipe because it's also signaling that the economy is stronger than anticipated by the bond market. This is the bond market right here, by the way. This is the bond market. So if yields come lower, then and right now they look strong. They do look strong. So we'll see. The Fed has to pause and cut rates for these to really come down. So this is another, this is another tightening. This is another factor that's tightening financial conditions right here, which is going to be the 10-year yields or yields in general. All right. So yeah, do I think the dollar goes up? I'm not sure. I'm really not sure if the dollar goes up. All right, let's take a look at Palantir here. Palantir pulled back into that zone. Shoot, buying opportunity for the long haul. Got all the way up to 19, and then we hit 16. Dude, that was a buying opportunity for Palantir right there. We'll see how that plays out. Palantir looks good. It looks like the Qs are starting to roll over. It looks like S&P starting to roll over a bit. Dow was hanging on. IWM's hanging on there. Not a whole lot of strength. Tesla probably rolls over. It probably got rejected by that PDC line. Zoom. Unfortunately, Zoom dropped right back down below the 200 moving average after it tried to break out, got rejected by the previous zone, came back down. But we may be getting a golden cross here, so the momentum's still to the upside. Hopefully, those earnings come in, pretty good. So we'll see how the earnings come in for Zoom. I expect them to recover. I expect Zoom to recover, especially with the secular changes in the economy, which is we no longer are traveling for business. We can just do Zoom meetings, right? And they're still dominating in that aspect. So I have a big trade on for Zoom. I'm looking for very long leap calls to play this to the upside. Teladoc also, right? One of those companies that sold off a lot. They're still consolidating. This is a lot of support for Teladoc. If we can somehow, we couldn't hold above this level. If we get above this 27 level, really 20, I want to say 25.50 and hold for a while. We just couldn't do it. If we get above 25.50 and hold, this thing could have some legs to the upside, right? We're getting those moving. Oh, we can't even see that. My bad. You're getting the moving average convergence where, they're starting to tighten up. Look at these moving averages. When they tighten up like this, that's setting up for a big move. So we need the overall market to break out. We need XL. Is it XLU? XLU? No, it's XLV. XLV? No. Oh yeah, XLV. It's breaking out. So XLV is going to be the S&P 500 healthcare ETF because Teladoc is healthcare, and you see this gigantic wedge. So Teladoc is weak compared to the overall market because when the ETF breaks out and price doesn't, it's not a good signal. So that's definitely not in our favor. But for the most part, we are getting a breakout in the healthcare sector. This is market breadth. Yes, the S&P is selling off. Yes, the Qs are selling off. But look at the ETFs. Look at the market breadth we're seeing here. XLV, the healthcare ETF is moving up. There are buyers rotating out of Qs into healthcare because we just haven't seen that move happen. Now, if we move over to biotechnology, the biotech ETF, right? This thing has been consolidating for a while. This looks a little funky though. Why does this look so funky? Man, this thing's just been sideways. Oh, there we go. Okay, I knew there was a bigger trend here. So the biotech ETF has a clear resistance, right? Very clear resistance above the 135 to 138 level. And if this breaks out, if this starts to show some strength here, my favorite play on this is going to be CRISPR technology, right? The gene editing. That's a gigantic. This is probably one of the most strongest biotech narratives, which is the ability to change genes. If they are successful, this thing should launch off. This is not a suggestion because it's very volatile, and who can read the research? I can't. So it's really you just got to watch price. But if that biotech ETF breaks out and maybe there's some good, this is a real bet here. This is a real bet. This isn't a promise to anybody. I know people say, oh, they're going to do this. We don't know if they can deliver. We really don't. Over time, yes, but we don't know if CRISPR technologies can actually deliver. So you got to be careful here. You got to be cautious, and you got to buy the lows. I wouldn't even do options on this kind of play because this thing could move sideways for 6 months to a year because of the trials. So I would look for shares on this type of play, me personally, just because it's very uncertain, and that theta will eat you away, right? That theta will eat you out. So, excuse my language. Teladoc and CRISPR. Teladoc is my favorite play. Momentum. I'm a growth investor, swing trader. My favorite play is Teladoc for the healthcare and CRISPR for biotech. You have some other plays, but that's what I like to see, right? And then obviously Zoom for telecommunications. And Tesla, might as well just call me Kathy Wood. I'm just playing. But obviously Tesla too. And then I like crypto. I like Bitcoin, Ethereum, and Chainlink there. So that's what I'm looking at for that for that price action. All right, so let's get back to the intraday here. Let's see, is Tesla finally finding some support? Okay, we do have support here for Tesla price action, right? Previous support. We'll see if it can hold. Maybe it is finding a bottom right on this day. Right now, the indexes are not, so I'm not too confident in that. Um, but we are looking to see, can we find support here? If, like I said, if there's any other names you want me to evaluate, I will, or indexes if I missed anything. We'll take a look at Meta too. It is Friday. Have the macro report coming out. I'm going to finish that macro report up here in about. We're going to be done here in about 20 minutes, 15 minutes. Ask your questions. Get your Q&A in now. What up, Dustin? Get your Q&A in now. I got to start getting to work on the report, the technicals. Everybody's a little fearful. It is Fearful Friday. Um, but I'm pretty confident. There we go. IWM breaking out. IWM is starting to break out. I'm pretty confident that this bull market continues higher. A lot of reasons for that. Um, the economy is hanging in there on the services side, and hey, I think we're gonna stay. I think we're gonna remain pretty solid here. Descript. Oh, that's what it was. When markets bottom. When markets bottom. Negative real rates. SNL crisis of the 1990s. I think that's what we've seen here. The market bottoms before earnings, and then payrolls, GDP. All right, I'm gonna throw up some. Let's see who's actually moving today because I know that there's some names here. Let's see, who do we got? We got some movers. We got some market movers today. I'm gonna take a look at where that market breadth is coming from and see if there's any bigger term setups. Rivian. Did Rivian break out? Rivian is still consolidating, by the way. So look at Tesla showing some support there. RVIN. I don't know the ticker for Rivian. Okay, so Rivian is still consolidating at these levels. It probably sold off because of Tesla, but that's a big. This thing should break out. This looks like it tried to break out. Rivian should probably break out if the market goes up. But you basically have a big consolidation right between 23 and what is this, 27? 23 and 2650. So that's a strong move there. I think their earnings are already done, so that's good. You don't want to really get long anything into earnings. You want to wait till earnings are done, which is why the setup for Tesla I think is really good because earnings are already done. We're done with the earnings. No surprises there. You got Rivian. Oh, Carvana is selling off finally. TSLL, this is a Tesla bull shares down a lot. TSM is down. It is filling the gap. SLB, Schlumberger, whatever. Uh, UAL is moving up. Netflix still pulling back. Twilio, Etsy. See if there's any big daily charts. Rivian has probably the best daily chart that I can see right here as a swing trade. Would I trade it? I don't think so, just because I'm already pretty much in some trades. But Rivian has a nice setup. J&J is surging higher. Super Microcomputers had a very strong uptrend also. Who is this? Applied. Oh, AAOI. This has a very AAOI. Let me see what this is. Like communication equipment. That was whoa. Now that is a strong market, right? I wouldn't suggest this to anybody. I'm just looking at it here. Just popped up on the screener. Yeah, what up, Dustin? Let's see. Oh, you got a little wedge there. I don't know if it actually has some legs. I have no clue what the story is. No clue what the story is there. All right, let's see what CNBC is talking about over here. See if there's any good stories. Comfort with AI. AI anxiety. Global macro fears. Okay, good. Goldman Sachs chief global equity strategist. I really want to hear what this guy has to say, and then we'll do a little analysis on what they're saying over there at Goldman Sachs. Before we get there, though, don't forget to hit the likes. Help us out with the algorithm. Appreciate you guys. I am going to hit the little girls' room real quick and get some coffee. And then we're going to go over this macro story. Until then, I'll turn the music up. Let me get Tesla's price action back on here, or even S&P. Trader chart. There we go. All right, I'll be right back. Get some coffee before we do an evaluation on this macro strategist. See what he's thinking about. All right, I'm going to turn off the music so we can actually hear this. Hear what this guy is slanging. Let's hear what kind of news he's slanging here.
Pharmaceuticals, but we'll look toward the macro for our story abroad today. Today, UK retail sales smashed expectations for June, but amid near 8% inflation there, consumer confidence fell in July for the first time since January. Our next guest sees global purchasing managers' indices as a risk to earnings, especially as inflation starts to cool. Joining us now, Goldman Sachs Chief Global Equity Strategist and Head of Europe Macro Research, Peter Oppenheimer. Peter, it's great to see you.
Hi. You as well. Thank you.
It's interesting that.
Hey, real quick, can you guys hear over there on YouTube? Make sure. I just want to make sure the sound is working. I don't want to play half the clip. Nobody can hear. Let me know. Give me a thumbs up. Come on, we got 7 of you. Somebody give me a thumbs up so I know if you guys can hear. All right, cool. Thank you. Appreciate it.
Here in the U.S., markets have been migrating to this view that we maybe can rely on something of a soft economic landing. We've been working through a period of weak PMIs, manufacturing in a downturn. And how does that play against what you're expecting in the rest of the world for the rest of the year?
Well, Michael, very similar, really. I mean, our view has been for a long time that all global economies, or main ones, would avoid a recession. We'd have a soft landing. That's still our view in Europe as well. We've had a slight, modest technical recession in Germany, but we expect that to be very short-lived. There has been significant weakness in manufacturing, and that's obviously hit parts of Europe quite hard because some of the countries are very heavily tilted towards manufacturing and exports. But overall, it's a relatively similar story to the US. Very strong labor markets, plenty of pent-up savings. Consumer spending and services have held up well, and we could continue to expect that to be the case. The difference, of course, in Europe and elsewhere relative to the US is that inflation is still not yet coming down as quickly. We expect it to do so. And of course, we're still seeing rate rises. But overall, the picture and indeed the performance of the equity market is relatively similar.
Yeah, and it seems, I guess, perhaps just slight differences in timing in terms of when these things are happening, as you mentioned, with inflation. What does the weakness in China mean for the rest of the global picture? That's been a real absent piece of the case.
All right, let's interpret that really quick. He's just saying, yes, manufacturing has been pretty weak, but it is starting to recover. If you follow us in the macro report, you'd see that, yes, the manufacturing leads the business cycle, but what we are seeing is that the very important, probably the most important factors for manufacturing is new orders, okay? New orders, which is people ordering, and inventories, that correlation right there, which is we see inventories are dropping month over month and we see new orders picking up. What does that mean? That the business cycle, the manufacturing cycle is starting to turn up in the US at least, right? Maybe in other countries also. We know the China's PMIs came in weak, but we expect that to go up because you're at the bottom, right? Now governments can start printing, and we expect that manufacturing cycle to turn up, especially with the onshoring of manufacturing here in the US, especially with the fiscal policy for infrastructure. So that's basically what he's saying is, yes, it's weak, but we expect it to recover going forward.
For a much stronger global economy.
Absolutely. I mean, China, in a sense, is in a very different situation to the rest of the world. I mean, it's facing deflation. Producer prices actually falling. Unemployment is high rather than low, as we're seeing across Europe and the US. And of course, growth is pretty weak at the moment. There are hopes of more stimulus, which has been reflected in the market just recently. But generally speaking, it's had a negative effect on overall global manufacturing and indeed the inventory cycle, which is weakening. But of course, in other parts of the world where you've got strong consumer demand.
Now, real quick, the whole, he said that they are in deflation. That is exactly what the Fed wants in the US is deflation. They want to see deflation, which is prices are not just slowing down. We're in disinflation right now. Prices are coming down, right? We're in disinflation, but deflation is prices start to drop. If we get that, what do you think comes next? We can now start pumping. The Fed, Jay Powell, can start cutting rates. When we get deflation, he can start cutting rates. They can start, if they need to, push the balance sheet up first. One or the other comes first. Who knows? They're not going to come at the same time unless we have a crisis. So if we get deflation, here comes the stimulus.
And labor markets, that's really been what's holding up both the economies and indeed earnings in the stock market. And I expect that really to continue. We have seen some parts of Europe, of course, which are very exposed to consumer sales in China, like luxury goods doing very well. But the manufacturing story and the services story has really been very distinctly different, I think, year to date.
So globally, Peter, when you look at the economic story and the market story, where do you think the mismatch is, if at all? I mean, you've just given a good overview. Do you think that investors, for instance, are too excited about the end of the hiking cycles? in some of the markets, even though we're still seeing inflation?
Yeah, our view is that we'll get a soft landing, and that we think is supportive for equities, albeit in an environment where actually profits are pretty flat this year, both in the US and Europe. We expect only modest profit growth next year. We do think that inflation has peaked, and we're very close to a peak in rates in the US, lagging behind in Europe and some other places. But we think the market is probably too optimistic about the pace and speed of rate cuts. So the balance for us, really, particularly when you consider the moves that we've seen up in equities year to date, is that we've got a relatively flatter picture from here. We've got a neutral in equities in our global asset allocation. We don't think the picture is negative, but we do think index returns will broaden out a little bit, bearing in mind that most of the gains we've had year to date have been very concentrated in specific areas of the market.
Yes, and to that point,
I know this guy is very boring, but hey.
Peter, I mean, you know, non-U.S. equity markets had been outperforming the S&P 500 for a good long stretch coming into the last few months, and that seems to be when the sort of AI boom kicked in, and the Nasdaq in particular in the U.S. Became the engine of a lot of upside. That seems familiar to a lot of folks of previous cycles when the U.S. Sort of near monopoly on a mega cap growth tech, you know, made the entire argument for relative performance.
Yeah, and it's been an extremely important driver in the US, of course. I mean, the market is up, the S&P close to 20%. The equally weighted index is around half of that, and the median stock is up around 6 or 7% year to date in the US. So it's really been very concentrated in those large mega cap tech companies. And they've been doing well despite rising rates. Very different from last year when rising rates generally forced those stocks to derate. And I think the explanation, as you said, is growing optimism about their future earnings path. Now, the concentration of technology in other markets is much smaller, particularly in Europe. But nonetheless, we have seen defensive consumer staples doing very well there. And actually, some of the more cyclical value parts of the market, things like autos, travel and leisure, have been amongst the best performing parts of the European markets. And that's helped them to broadly keep in line pretty much with the returns we've seen in the US, despite the lack of exposure to technology.
Absolutely, yeah. Europe has certainly nearly kept up. Peter Oppenheimer, thanks so much. Appreciate the time today.
Thank you.
Barbenheimer, which
That's
I'm
right.
sure he
Peter, not
fully
J.
was
Robert.
aware.
Okay, that was pretty boring. He didn't say much. He's saying the same thing we are. We just want to definitely see, hey, how is our narrative compared to other global strategists? I actually agree with that guy. Things are slowing, but what it really, rings the bell for more stimulus if we can get down there. And I think, like I said, if inflation continues to decelerate at the pace it is at right now, then Q2 earnings season takes the stage. If we continue to decelerate at this pace, the Fed can really turn around. The Fed can really start to turn around because it's always about inflation, especially with the economy weakening, and the need for the economy fuels, tax spend or not tax spending. The economy is how the economy is exactly how economic growth is how the government pays its interest bill. Okay. So they can't pay their interest bill unless GDP comes back up and starts to recover. Therefore, if GDP keeps slowing, their interest keeps going higher because of the debt. The Fed ends up pumping the markets or pumping the economy by purchasing the debt so that GDP can go high. It's really confusing. I'm going to write about this. I'm writing about this in my article. Stay tuned. Get the free newsletter, right? Sign up, link in the bio. And it's called the cheat code to investing, right? The cheat code. I don't know what I'm going to call it, but basically understanding this cycle, what's happening in this macroeconomic cycle here. I think we figured out that the markets just respond to more stimulus. Okay, they respond to more stimulus more than anything. And liquidity factors are starting to bottom out. And you only see this every couple of years, right? You see this every 3 years. The last time we saw the liquidity cycle turn up was the bottom of the pandemic, and we had the biggest run in stock market history. So my anticipation is that equity markets are now sniffing out the end of inflation and the beginning of the QE cycle, the beginning of rates, lower rates, the beginning of more liquidity, and globally, not just in the U.S. And that's going to set up for another bull market. I think that's where is there going to be turbulence? Sure, because again, the recession risks are still there. The inflation risks have not fully evaporated yet. And you have geopolitical stuff going on there. We're not there, but we're in the spigot. We're in the middle of the turn. We are in the middle of the turn, and I think that continues to happen. So that's all I wanted to finish off with
for the market.
Okay. I want to finish off with that. I'm pretty much done here with the stream. Again, just so you guys know, I will be streaming tomorrow. I'll probably stream tomorrow. I'm going to stream tomorrow. I don't know, usually around 3 p.m. Eastern, somewhere around 3 p.m. Eastern. Not sure. You'll see that go up. You just check the YouTube stream. I'll have it up there. And we'll be going over the macro report. So what exactly are we going over tomorrow? We're going to go over what is the economy? What is the picture looking like in the economy, right? We're going to look at all the news that came in this week, right? All the macroeconomic news, not just news, I'm sorry, the data that came in from housing, from business activity, from policy. We're going to be looking at policy also. What are the policies that are changing, staying the same? How's that affecting us? And then we're going to look at the technicals. Obviously, the technicals of the market, where the biggest plays at. What are the Qs looking like? What is the S&P outlook over the next 3 to 6 months? As far as the technicals look, right? Parsing that with the economy. And some of the narratives out there. What are some of the narratives? What are some of the correlations? What are some of the, some of the correlation, the probabilities that could start to pick up? My thing is inflation is coming down. I'm going to finish off with this. Inflation is coming down. We're seeing it. People argue, well, core is too high. Look at shelter. Put this in your head. Shelter is the last component here. Shelter is the last component to bring core inflation lower. And shelter is due to collapse, due to roll over. That comes in, core goes lower. Investors are offsides. They're like, oh my God, it's falling faster than we thought. If that's the case, that's going to fuel the wave 2 FOMO. Also, there's big buyers. There's $5 trillion on the sideline. A lot of people are offsides. Equity margin is negative. Equity flows are negative. So there's still buyers coming into the market. We should be seeing that coming into, right? What is the biggest negative here? Well, it's oil prices breaking out. If oil gets back above 70, 78, 79, 80, 83, that's going to put pressure on inflation. So that's the big negative here. The dollar is giving us another signal. If the dollar starts to surge back up, which I really doubt, we might be in trouble. But I see the dollar rolling over. And if the dollar rolls over, that's a risk on signal. Bond yields, where are they going to go? The market's already priced in the Fed hike in July. We've already priced that in. So I'm not worried about that. We're not really the market is not worried about the Fed hiking again. It's worried about the tone. How is Jerome Powell going to speak expectations? Is he going to say, okay, we're at restrictive territory. We don't need to do much. We're pretty much there. We're data dependent. And that really data dependent is inflation. If inflation expectations continue to drop and fall, we could get that cut this year. Looks like we're headed for a soft landing. The economy is holding together in the service economy, in the services side of the economy. And I think we're in a soft landing. But other than that, I think I'm gonna again. I'll be live tomorrow. Check me out there. Appreciate you guys. Newsletter in the newsletter. The newsletter link is in the bio in the description. And hey, if you got questions, hit me up. Ask the questions in the newsletter, whatever it is. And I'll catch you guys later. You guys stay blessed, right? Stay blessed this weekend. Stay safe on the weekend. Stay safe. Invest in your health. Invest in your physical mind, your mind and your physical. Keep exercising. Get your exercise in today. Keep a growth mindset. All right. Keep a growth mindset. Do what you got to do to overcome your obstacles. And I will catch you guys in the next